Hello. Vindi here. Welcome back. If you've been with me for some time, if you are new or watching my videos for the first time, welcome. Okay, so let's dive into it. For sure, most of you might have realized the correlation between the USA 500 or the US 500, S&P 500, whatever you want to call it, with the Nasdaq 100, okay, or the Nas 100. You might have seen that, oh, damn, these things are super correlated. If you look at this chart here on the left, I have the USA 500 chart, 45 minutes chart, and here I have the Nasdaq 45 minutes chart. You can see they look almost the same. We've had this one that move, and we're looking at a cipher pattern of some sort, a shark pattern, sorry, of some sort at this point. Okay, so we're looking at that. Okay, and both charts are almost giving us the same things. Like this chart is a reflection of that. Of course, this is not going to be 100%, but you can easily see that they are doing almost the same thing. Okay, so they are highly correlated. So where is this correlation coming from? If we were to dissect, because obviously I'm not just going to do a video and not explain as to where this correlation is coming from. Okay, so I'm going to pull out a spreadsheet, not a spreadsheet, a PDF document rather, which I'm going to link down in the description box below, or just check the pinned comment. You will see a link to a Telegram channel, the Vindi Telegram channel. That is where you will find this PDF. If you click that, it's going to take you straight to the Telegram channel. The PDF, I will post it there. Now, let me pull out the PDF and explain. Okay, I'm going to start by explaining first, maybe before I pull out the PDF. Let's say maybe you are just new to trading NAS or new to trading the S&P 500. Let me just start by simplifying what this S&P 500 is, or what this 100 Nasdaq 100 is. Okay, so with the S&P 500 first, if we look at this particular guy, this is an index. Okay, so this is an index, or most of you might have you might know this as indices. Okay, so this is an index which consists of most American companies, not all, but these are most largest American companies. Okay, this is what that index, it's tracking the performance of those companies. Okay, the largest 500 American companies. That's what the 500 is for. So if you were to ask what this 500 is for, that is what the 500 is for. With Nasdaq, this is tracking the largest 100 tech companies. Yeah, this one, it's not tech companies only, it's mixed from different sectors and all that. But with this is heavily oriented on tech companies. Okay, the Nasdaq 100 is heavily oriented on tech companies. We have around about one or two companies listed, not necessarily 100. We have one or two. I'm going to explain in a minute why we have 102 companies. Even here we have 505 companies listed. I'm also going to explain as to why we have that. So that is the simplest explanation. If you're a beginner, this is just tracking the 500, the biggest 500 companies on the S&P 500. And this one, of course, it's tracking the biggest 100 companies. And all your VIX 75, they're just trying to mimic what the S&P 500. So you can think of this as some sort of a barometer, or a benchmark that is used to track the performance of stock portfolios in America or globally. That is the S&P 500. Okay, so it's most likely to tell us how the stock market across the world it's behaving. Okay, we use this, and the VIX, they're just derivatives of this. They're trying to mimic what this USA 500 it's actually doing. Okay, so that is how I can simply put it out there. So if you're a beginner and all, then you are trying to figure out what is this NAS 100 that these guys are making noise about and all that. And that is what the NAS 100 is. We're looking at 100 companies. We're looking at 500 companies. Yeah, it's mostly tech companies. Yeah, it's actually mixed. Okay, from different sectors. Now, let me see if I can pull out that PDF document. I'm going to link it down as I've said. So down here, I've compiled the Nasdaq 100 companies. You can see we have Apple, that is the biggest, or they have more weight in the Nasdaq. So think of this as something that moves the Nasdaq easily. So we have all these tech companies listed. Okay, but you can see Here we have 102 instead of 100 companies. So to explain that, this is mainly because now the Alphabet Inc., aka Google, have two classes of their share. Their share classes, they have class A and they also have class C. That is why you see Alphabet Inc. appearing twice. Okay. And also Fox Corp there at the end, they have two classes. That is why we're having 102 companies. But if you think about it, if we combine these two classes into one, we're gonna get to 100 companies. So these are the companies ranked from high weight or greater weight to smaller weight. So you can see the first 10 companies, these ones, they actually make up a lot of weight for Nasdaq. So I've highlighted these green companies for you so that you can see that even down there, I'm gonna scroll down on the companies that are listed on the S&P 500 once more. We still have those companies like Amazon and all that, and they're actually forming part of top 10. Most of these they're forming part of top 10. So you can see part of top 10 there. We're having these big guys that I've also highlighted on the Nasdaq. So this is actually telling us that these guys, they are a reason why they're the reason why we see a high correlation between Nasdaq and between the S&P 500, because this weight, if we're to look at the weight, the numbers, probably I'll do a separate video. Hit the like button if you have watched up to here, and don't forget to subscribe if you are new. Of course, I'm more free videos like this. You don't have to pay a shandis. Okay, these guys have more weight on the S&P 500, and they also have more weight on the Nasdaq. So that explains why when Apple moves positively, the Nasdaq moves positively, and the S&P 500 moves positively. The same guys also have more weight, as we can see. That is why I've colored them in green. Okay, so that is where the correlation is mostly coming from, and also other factors. Those are not the only factors. Other factors as well. They actually give us that positive sort of a correlation between Nasdaq 100 and between the S&P 500. And the S&P 500, if you scroll past, you can see there is definitely around about 505 companies, mainly because you can see this one, Under Armour, have actually class A and actually class C, and another company also have class B and all that. Okay, so you can see that those classes, they're the ones that are actually making up for that extra shandies. Nabo, that extra number, that five number that we see instead of 500, we're seeing 505. So that is how what Nasdaq is and how the correlation is actually driven. It's actually driven by the fact that we have these guys controlling most of the weight within the index. Okay, and also this is used as a barometer to derive your VIX charts, and your VIX 75s are actually coming from that, but those ones are like, so that is why they're called like synthetic. They're not real. Okay, they're just trying to simulate the real market, and most of those derivatives are actually sampling out data from the S&P 500. I'm not sure if it makes sense. If it does, let me know in the description box below. If this is a cool video, let me know once more. Click here on the link once you've moved the diding. That's what the Telegram channel is. Share the link with your friends. Share the video with your friends. If you think this is cool, if you're from, let me know where you're from. You're watching the video from down in the comment section also. Otherwise, let me shut this thing down. That is where the correlation is coming from. Also, pay attention to this. Check the previous video that I've released that is based on news on where to find the Nasdaq news and all that. Okay, and did I leave anything? No, I didn't. Otherwise, sharp sharp.